Welcome back to Ferocious Education. This is Ed. Today we're giving another update on Palantir. Now, this stock here has been going through a massive beating in the last few months, from falling from its glory around $30 down to around $10 in the last few days. Now, this stock itself is a software technology company that has multiple different solutions. So Foundry, Gotham, and Apollo. Foundry operating systems in the modern enterprise, Gotham is operating system for global decision making, and Apollo is operating system for continuous delivery. And so it has a lot of importance for Palantir, and it has a lot of government contracts. They just released the CEO a letter back in February 14th, 2022. And they're talking about the company foundation, whether it being actually a software company for defense and intelligence agencies whose budgets were larger than economies for some countries. And their business has changed a lot since then. We've grown significantly over the past 2 decades, helped to create an entire category of software developments, one whose full potential we believe is still becoming apparent. The strength and continued survival of every large organization in the world requires the implementation of software platforms that are capable of enabling both technological and non-technical workforces to model and make sense of the world we live in. And they do talk a little bit actually in depth about some of their softwares, and a misalignment here exists between the producers and the consumers of the software. Software industry has become extractive enterprise. Most of the largest consumer internet companies in the Silicon Valley have built software products whose principal value is that they enable the efficient extraction and monetization of our personal information. And where we are the product for sale, not the software, which itself is often thin. So they do talk about that, and we have views and defend them. The decision to act on something, even approximately principle or actual belief, is radical one in the corporate world, given the current tendencies in public life to eliminate any possibility of provocation and consequently any opportunities for genuine disclosure of original thoughts. So he does go on and talk about that. It's a little bit of a ramble, nothing really extensive that basically tells you about the company's operations in sense. But basically it talks here, it summarizes it. A fortune union exists between our business and moral objectives. Other companies engaging in elaborate efforts to distract from the lack of social values their underlying business create, but the most attempts for such market are both ineffective and transparent, and we believe in public is largely uninterested in such theater from either business or political leaders. So they're basically just sharing that, hey, we have morals, we'll stand by them, and we will basically continue to not try to sell your data unless, probably this is kind of unwritten, unless it's for their intelligence and decision-making platforms, which I'm pretty sure they do use some personal data. How are you going to make decisions without having that? Anyway, some of the press releases news back in 2022, February, earlier on. CDC partners with Palantir to bolster the fight against COVID-19. And on February 17th, Palantir's report revenue growth of around 41% for full year of 2021, and US commercial revenue up 102%. Now, there's a reason why this one spiked in the recent few days. And it is, of course, the war. And that kind of seen a little bit of a jump. The next day dropped a little, but that is the main news and the main catalyst coming to it, expecting that the US would basically up their need for Palantir for intelligence and defense coming in towards the war. And it's very much escalating day by day, and it's hard to tell you what's going to happen. Basically, political analysts can't even tell you that with 100% certainty. So CDC here, this one, Palantir software will continue to power digital operating systems for the US public health response to the pandemic. And the agreement marks an expansion for Palantir's role for supporting the US fight against COVID-19, from vaccine distribution to new areas such as improving supply chain resiliency and the distribution of life-saving therapeutics. Palantir has also been a longtime partner of CDC on crucial public health issues, including countering Ebola, surveillance of foodborne illness in the management of anthrax and bacterial special pathogens. Now, for their increase in revenue and growth of 41% for a full year of 2021, here are some of the highlights. They grew their revenue by 34% year over year to $433 million. Their commercial revenue grew 47% year over year, and the US commercial one grew 132% year over year. Government revenue grew 26% year over year and added 34 net new customers in Q4 2021. Loss from operations of around $59 million, representing a margin of 14%, which is up 3,500 basis points year over year and 900 basis points sequentially. Now, adjusted income from operating of around $124 million, representing a margin of 29%, and cash from operations of around $93 million, representing a 22% margin. The adjusted free cash flow of around $104 million, representing a margin of 24%, and closed 64 deals of $1 million or more, which has 27 deals that are $5 million or more, and 19 deals that are $10 million or more. So for the full year highlights, it's kind of the same thing reiterated, but overall, the outlook, they expect $443 million in revenue for the Q1 2022 and an adjusted operating margin of 23%. Full year, adjusted operating margin of 27%. And per long-term guidance from the CEO, we continue to expect an annual revenue of around 30% or greater in 2025. So a quick thing here, the margins from the full year of 2021, you're able to see that you had around an increase of around 53 in US revenue, but the overall margins is around 28% for adjusted free cash flow and cash from operations 22%. So you're kind of getting there. They're not showing really the gross profit margins, but the cash, and that should be somewhat close. So moving on, we have some other news. For instance, them partnering with Ferrari to bring data-driven performance decision to race operations. And their fourth quarter, you're able to see more information about that. But basically, from a valuation standpoint of view, their current price over book is 10.15 and price over sales is 15.09. Tech companies and software companies tend to be overvalued in this sense, but the SP 500 average is around 5 for both. TTM for profitability, you're able to see it's negative, as we did see just recently. Hopefully this comes to be positive. Gross margins here appear to be 78%, but as you get to see from what we just covered for the earnings, it does have a few gaps to fill. Insiders and institutional buyers, this is massive. Carp Alexander liquidated 25% of his position, going from 86 million shares to around 64 million shares. On the 15th of February, around the same day he shared the letter. Also, Thiel Peter liquidated around 39% of his shares, going from 268 million shares to 163 million shares. And Van Group shared a position of around 127, but later on in January, January 31st, 2022, Sampo Holdings liquidated around 24% of their shares from around 107.5 million shares to 81.6 million shares. So it is a bit mixed. You're seeing some insiders, significant insiders, and massive institutional buyers or holders sell, and insiders appear to be a bit selling. Of course, they did have conversions before, but that could easily come from a limitation on when they have to sell, but they did sell quite a bit. Now, for short shares availability, you have 10 million shares at a very low cost of 0.25. So short selling is very easy for this one. And on any given day, short volume is around 60% of the total trading volume. Before we move on towards technical analysis, if you would like to see more contents like this, make sure to click the subscribe button and notification buttons on for this channel. It helps my channel a lot. And don't forget to drop a like, and let's move on towards technical analysis. Now, from a technical analysis perspective, there are a few kind of red signs, unfortunately. But you've seen a bit of a bounce from 974 going up to 1179 because of the start of the war. The moving averages are all bearish, where the 200 SMA is above the 50 SMA and the 30 MA is above the 10 SMA. Currently, the price point is below all these averages. And what you're seeing here on the average directional index is a bit of a pulse, around 36.26, suggesting that it is attempting to go for a reversal, and we've seen that on the chart already. The William percent R shows it's neutral. It's neither overbought or oversold. This indicator is very similar to the RSI. The MACD histogram is kind of showing that there is a push towards a positive reversal. It's attempting to do that early next week, so Monday, Tuesday or so. And you're seeing that it will be testing it. Depends on a green or red day, and it is a little bit hard to tell at this point, but it's very fragile. Momentum has actually decreased from Thursday to Friday, still on the negative side, so it's kind of showing that it's unlikely to break into a reversal, but it's still very possible. Now, Stochastic fast and stochastic slow both are telling you to be very, very careful because it's very volatile and it can easily drop, but it's kind of already on the lower point of views. So it is seeing that some of these indicators are pointing downwards. It's kind of 50-50 situation, but it is going a little bit on the downward side, so suggesting that you might actually see a reversal for this one. The moving average bands are actually going downwards, really not showing that reversal as much, but it's stabilizing a little. It's expecting for this one to trade between $13.99 and $11.45. Now on the Fibonacci retracements, you're able to see a significant resistance at 1742, 2269, 2695, 3121, 3727, and $45. The support is at 890. Now, this is a massive chart back, looking back from where it started at 890, and you're very close to there. So it's very tempting to buy. Now, the support is at 1093 currently, and then 997, and then around 986, and then 890. The supports, there are a few, such as an 1195, 1251, 1426, 1618, 1753, 1826, 1939, 2165, going up to 2357, 2430, 2616, higher to 2763, 2921, 3011, 3270, 3575, 3817, 3964, and then around 4235 and $45. Now, we do have some analyst recommendations. The price target for this one is around 13.17, which is around 14.82. The lowest price target is around $9, which is around 20% drop from where it is right now. The highest is $21 from around a month ago, and it's 83%. Now, based on analyst recommendations, you have 1 buy, 3 holds, 4 sell, which gives you 8 analyst recommendations in the last 3 months, and the average is a moderate sell. Comes to the question, what do you think you should do here? Well, in my own opinion, what I'm most likely doing myself is try to buy closer to around the $9. Now, this is for a long term. I do believe in Palantir, but the market itself is overvalued. So if the market crashes, then this one will follow. And you get to see overall something like SP 500 index, as you get to see, it has seen a bit of a drop. And this one hasn't been the biggest kind of closer with this one overall. But let's say like the NASDAQ index, you see a bit of drops. This one does follow a little. But overall, this is the SP 500 line. You're not seeing as much volatility in the market as Palantir, but if the market is a little bit shaky, this one doesn't do so well, or apparently isn't doing so well, especially with Alexander Karp and some people selling. It is a little bit dangerous, but in my own opinion, $9 is a non-brainer for this one, and hopefully I do prove to be right. What do you think about this one? Make sure to down in the comments below. Share, subscribe, and like, and have a wonderful day.